The precious metals are correcting, obviously. I believe we're dealing with three factors, and I've listed them here. India has doubled the import fees on both silver and gold. And then Modi has asked his citizens to stop buying gold. And of course, Indians, they historically distrust the Indian banks, and that's why they buy precious metals. They store their wealth, their savings, under their mattresses in the form of physical precious metals instead of putting that money at risk in the bank. Funny that I said at risk in the bank, because we typically don't think of money in banks as being at risk. That's because we're not Indians and don't have the experience with central banks that they do. Anyway, it amuses me that the leader of a country would ask its citizens to stop buying physical precious metals. Just an indication of the fallacy, the weakness of the fiat currency game. The idea that you would have to influence your citizens as to how they spend their money. And then the other two factors are higher yields, and we'll look at that chart. So we got the lower end of the yield curve is moving higher. We'll look at the 10-year in particular, since that's a key indicator in the yield spectrum. And then the dollar, or at least the dollar index, US dollar index, has strengthened, and that stronger dollar tends to weaken the precious metals. That's all I had to say there, and now we're into the charts. So this is silver. Let me expand this chart. We take a closer look. And so we got Tuesday and Wednesday, and we looked at this chart on Wednesday. Price was pushing up into this upper median line and clearly didn't break through. And then on Thursday, yesterday, and then continuing overnight, we got this big pullback. It's $9. Obviously tested the 50-day moving average for support overnight, and so far has found support there. We can see the lower wick, the short wick on the bottom of that price bar tells us that buyers came in at the 50-day moving average and pushed price up a little bit. Notice that MACD is rolling over, so still in bull mode, but rolling back over. Stochastics has dropped down into the mid-range. So clearly the excitement in silver has diminished. Are we going to get a bigger pullback than this? Will the 50-day moving average provide support? I'm hesitant to suggest that given the action in gold. And let's take a quick look at gold. So as I said on Wednesday, we could look at this sideways price action in gold as an energy coil, and I pointed out that the price movement out of an energy coil tends to be impulsive, but we don't know which direction it will go. We don't know if price is going to go up or down when it comes out of the energy coil. We just assume that it's going to be high energy. And so sure enough, gold comes out of the energy coil overnight, yesterday and overnight, and makes an impulsive movement to the downside, and that's $99 right now. So impulsive price movement to the downside rather than what we might have preferred to see, which would have been an impulsive break up above the 50-day moving average. MACD fully in bear mode, rolling over, looks like we're about to get a new sell signal, and energy, as suggested by the stochastics indicator, is low and dropping. Metals are not looking exciting like they were on Wednesday, but they're not looking horrible either. I'd still describe this as a sideways consolidation at a high level. Silver's at 78. We'll look at another chart and I'll show, we might get a pullback to 75 as a potential support level. $75 silver is nothing to sneeze at. $4,500 gold, same thing. Let's keep rolling here. This is our technical downtrend chart. Nothing has changed from the perspective of, are we in a downtrend or an uptrend? Yes, we're in a tentative uptrend at this point. This breakout, I'm still leaving the question marks. It appears that we definitely got a breakout above this downward sloping trend line. Have we fully broken into an uptrend? I'm not going to say that definitively. So, in a tentative uptrend, that's how I would describe the current action in silver. When we start looking for where might this correction end, potential support down in this area, round number at 75, a little bit lower from where we're at. This was the three fan. And on Wednesday, I was suggesting that this price peak, that bullish doji candle, that could be our the price peak for our third fan. Well, clearly I was premature in that. There is our third fan. And so now we have our third fan in silver. And what we're looking for now is a breakout above that third fan, which of course is not going to happen overnight, not going to happen today, almost certainly. So that's our three fans technique. We looked at that price, nothing has changed here. Silver's going far higher. Whatever's going on right now in the metals does not change anything in the long-term outlet for the precious metals. No change there. This is the yield on the 10-year Treasury note, and notice that it's poking up into 4.5%. I've seen analysts suggest that this 4.5% level, this is actually what our president is watching when he tries to decide whether to start lobbing bombs and missiles. He's looking at this chart and making a decision based on interest rates. I don't know whether that's true or not. 4.5% seems like if you were trying to draw a line in the sand where you were managing interest rates, that seems like a reasonable place to draw that line. The idea of sustained higher interest rates make the precious metals less attractive because, of course, they don't have an interest rate. They don't pay any yield. This is the US dollar index, and I'm emphasizing index to point out that this is the basket of 6 currencies that makes up the US dollar index. Given the changes in recent years, that basket is no longer really a good representative of the US dollar. What is more indicative or a better representative, let me say it that way, in my opinion, is the trade-weighted US dollar. And if I understand how this index is prepared, it is basically showing us the strength of the US dollar within the currencies that the US actually trades in. And so, for example, if the US isn't currently trading with India in rupees, the Indian rupee wouldn't be included in this trade-weighted basket. If we are trading with India, we would include the Indian rupee in here because that would be part of our trade. So I believe that this representation of the US dollar is more accurate as to the strength of the US dollar at this point in time, because it's all about trade, not about financial futures and baskets of currencies. But that was a tangent. We started to look at the US dollar index, and we can see this strength. This is the daily time frame. We got this pop up above the 50-day moving average. Notice that this is an open gap, so reasonable to expect that that gap will be closed on this move, which means we've got another couple of days at least of strength in the US dollar. MACD on a buy signal and shooting pretty quickly up towards bull mode, energy very elevated. So strength in the US dollar index as a headwind for the precious metals. That's all I've got this morning. I just wanted to do a touch in, let you know what I was thinking on this continuation of the correction in the metals. So sideways consolidation. I prefer that to correction. This is a sideways consolidation, folks, and I'll talk to you soon.